Hey, Marty James here. Take a little break from the fly fishing. The skate hatch is going on. I can hear them everywhere. The carp are eating them right off the top. But, what I really want to talk to you a little bit about is 2021 taxes. 2020 is basically done. They've done a lot of changes that's going to impact your 2021 tax returns. And primarily, if you have kids, and a disparity in income and such between spouses, you may be filing married filings separate this year. And what's coming into play is the new expanded child credits that phase out a little quicker than the old ones. We also have this stimulus check, this $1,400 that we can still pick up when we file the returns for 2021. So this is something you really need to think about. For a lot of people, you're going to end up paying less tax with filing married filings separate, as opposed to what you've traditionally done is file married filing joint. Here's the other kicker. The one spouse is probably going to end up in a higher tax bracket than they would normally be, and that person's probably going to end up owing. So what you'll need to do is check the withholdings and such to be sure you're not going to be in a penalty situation. We can help with that. The other thing that you need to consider is this would be a good year for that spouse with a higher income who's not going to be getting all the stimulus money and the child credits that his spouse is going to get, or her spouse is going to get. And so you may want to be looking at, how much money can I put into a deductible type of account, like, a traditional 401k. So if I'm doing a Roth right now, maybe I need to do the traditional 401k, or SEP plans can work, and profit sharing and such. And then what you would do then the following year, hopefully we won't have all this stimulus going on, that you could actually convert that over to the Roth and ultimately end up paying less tax. Basically what would happen is, say if you're in a 24% bracket and you're pushed into a higher bracket, say you're in the 30s, well, what would happen is I'm going to deduct it today, in 2021, if it's in the 30% range, and then come back in 2022 when I file my return with that conversion, I'm going to pay taxes on it 24%, or maybe it's going to be 22%. So these are some things to be thinking about. It's more than just the stimulus checks and the child credits. You need to be considering your retirement plan contributions and how can you maximize that and the tax savings. So with that, I'm going to get back to fishing because these things are really hot.